Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HouseStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HouseStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks much for inviting me on, Jim. Good afternoon.
Apart from the NASDAQ, all the major stock exchanges are in the red again today after having a terrific Tuesday. Last week was in the red as well. Have we topped out here?
We're in a topping process, Jim, and the market has certainly become very squirrely. It's doing so today in a very logical fashion. It's just rotating money. You know, when you get all these institutional stocks that they've been doing nothing but buying. There are no such things as stocks that you sell. When just a few stocks like Google, Amazon, and butter your bread, they get hard to support. It's not like the little guys are buying them at $3,000 a share. So occasionally they take a breather and push other stocks arbitrarily up, and you know you'll have your flavor of the week. It could be value stocks, could be the cyclicals, it could be the drug stocks, the techs, but there's no real thought behind it. It's just kind of a mechanical process of rotation.
Now, we had the new phenomena over the past year of the Robin Hooders with no fee trading, using their cell phones to get into the stock market. What's their future when all of a sudden you have to pick the right stock to make a profit and not just join in the crowd?
Well, I like to think they'll become better stock pickers, but I'm not sure that's going to be good for this world. Maybe too late anyway. If picking stocks in a bear market is a whole different game. It's mainly a question of picking which stocks you'll avoid, which is probably 90% of them. So we're going to be entering a challenging environment that has been unseen not only by the Robin Hoodies, but by most people who are managing money.
That's true. Since 2008, it's been nothing but up pretty well.
Yeah, nothing but up. March of 2009, and we're going into, we'll soon be entering year 14. I guess you could say the bull market's a little long in the tooth.
In this situation, what's the best thing for you to do? Take your cash and run for the hills?
No, it's like I keep saying, it's just buy the stuff that everybody hates, and that's bonds and gold. And I'm not saying I'm not a gold's going to 5,000 kind of guy, but I do think that gold as an asset class will do as well or better as anything you could find. And of course, bonds have been intermittently popular recently because you have a lot of people unwinding out of the assumption that huge stimulus would cause big inflation and crush the bonds. In fact, the bonds are getting a bit of lift not only from that unwind, people covering positions going awry, but also from, I guess, the beginnings of a global flight to quote-unquote safety.
Now, I'm wondering when we're looking at a situation like that, do we have anything that we would call a safe haven? I know you said bonds and gold, but do people look at utilities or something like that? Because we like to keep the lights on for some reason.
Well, I think a couple of my colleagues are sort of gravitating toward the ultimate safety, which is a garden that can produce the things that you need to eat. I noticed that Charles Hugh Smith, he's one of the absolute best bloggers out there. He's a brilliant guy who writes in depth about a wide variety of subjects, but he's been talking up his garden like crazy. And the idea that in the coming depression, the whole economy is going to reorient itself around around energy shortages, and we're no longer going to be able to transport raspberries from New Zealand. The things that fill your grocery store shelves are brought there in a way that's very energy inefficient. It only works in an economy where energy is in inexhaustible supply. But gas prices right now tell you that there can be shortages, that there can be bottlenecks in supply, and I think it's an illusion to believe that it's going to pass. So the other guy who's been doing a lot of vegetable growing is James Kunstler, who writes a brilliant commentary called well, you know what it's called. I don't even know if I can say it on the air, but both of those guys I really think they're spot on with so much of their commentary, and they're putting all their energy into their gardens.
What happens if the Fed has the actual guts to pull stimulus and raise interest rates?
Well, I've been saying this for about the last 30 years, and I haven't been wrong hardly at all. Just a few months, I've been saying, the Fed is going to raise interest rates. You must be out of your mind. And even in the 1990s, when we were trying to gun our way out of the S&L crisis, they pushed a guy named Lyle Gramley. He was one of the Fed governors. They pushed him out on stage, and he back then was issuing the same veiled threats that we have today about the taper and tightening and all that. And I wrote a very impudently arrogant column that said, "Sit down and shut up, Lyle. There's not going to be any raising of interest rates." And when we see Jerome Powell doing the same dog and pony show, where it's on again, it's off again, we're going to taper, we're not. The one thing you should keep in mind is it ain't going to happen. There's not going to be any tightening. There might be talk about yes, no, maybe, but the Fed knows that they're going to bring the whole house of cards down the instant they even talk about tightening in a serious way. So that's why they talk about it in a way that's only intended to be inferably serious by the same imbeciles who hang on every single stupid word that comes out of the Fed. So you can take this to the bank. They're not going to raise interest rates. If interest rates go up, it will only be real rates that go up simply because the asset value of everything will be deflating. So that means that your 2% interest rate or 1% that is nominally low will become crushingly high when assets are losing 10% of their value every 6 months. So that's the only way interest rates are going up in a real sense.
Right now, I've noticed the banks that have made major profits, other companies, their plans for these massive profits are stock buybacks. Well, that's nice, I guess, if you're the CEO of the company and get a bonus because the stock price went up. But what happens if the market takes a dump and they need help? They'd had the cash on hand. Instead, they bought back their shares instead of using it to increase productivity or give bigger dividends. Would it be their own fault? I know they'll come crying to the government for help when it happens. They do every time. Should the government say, you had the cash on hand, why did you buy back your own shares?
Well, I'm going to suggest that that anyone who's interested in the answer to that question look at my current commentary. It's out there on rickackerman.com, and it says that there really is no money on the sidelines. Money on the sidelines is just a myth, and it exists as a state of mind to the extent that people will borrow that money into existence. And even when it's sitting in a money market account, it expands only when people get this crazy idea that all asset values will continue to rise more or less indefinitely. So the money on the sidelines, it's there to be redeployed, to be shifted around only as a function of mass psychology. But if you let the market start down just a little bit, threatened with a few growls, that money ceases to exist. the last place in the world that companies are going to want to, the last thing they're going to want to do is dig into that money of the mine and start using it like crazy to prop up their own shares. They won't do it. So I'm saying there is no money on the sidelines.
We'll have more with Rick Ackerman right after this.
Don't miss out. Stay informed. Receive the HouseStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HouseStreet.com weekly recap on our homepage at HouseStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, how are battery metals doing? Do we think this EV push is the real deal, or is it a lot of talk?
How are the metals doing?
The battery metals, the ones that go into the batteries.
Well, I had mine, I use Duracell, and I've got a container of about 100 of them that leaked on me. So I can tell you that one thing the batteries are doing with great consistency all the time is leak battery acid, the small batteries. But I gave up on that. One of my colleagues who does a newsletter inspired me to jump into a stock. The symbol is LITOF. It's a lithium producer, and I sat on it for a couple years, and then I see that whatever move waiting for a couple years, the big move was made in about 3 hours. So they have their ups and their downs, and I think that even there's a cycle of good press coverage and bad press coverage. I think I saw a story on on redstate.com that was talking about how electric vehicles are essentially the biggest force in the destruction of the rainforest right now. So batteries still have the usual stories that move them up or down, depending on how the sleazeballs who are running the game feel, whether they're in accumulation mode or distribution mode. But that's all it is. It's just a trade. And, the technological processes, the advances are incremental. I suppose we hear kind of mythical stories about batteries that will give you 1,000-mile range in your car and this and that. But the reality of that will just continue to kind of dribble out.
Well, range anxiety is a big problem with electric vehicles. I know at least your really expensive Tesla models tell you how much charge you have, and the computer tells you where the nearest charging station is so you don't run out. That's a nice convenience. I don't know if the other models actually do that. Also, when it comes to servicing the thing, do we have people who know how to fix them?
Well, fortunately, nobody can fix anything anymore, but the cars have fewer moving parts, so that helps. When you consider the things that over time an internal combustion engine will need to keep it running smoothly, especially when it gets old, the dynamo that runs the electric cars is it's a piece of cake. So cars are becoming less of a maintenance burden, and I think that's a good thing because you can train a machine to maintain a car if it's a question of swapping out parts rather than fixing things.
The precious metals, will they pick up if the market gets wobbly?
I'm not seeing it. Gold has been in a kind of in a bull waiting period. It's willing to go into a bull market. But I think the big move in gold and silver will be predicated on some sea change in the global geopolitical or economic picture. I think that it's a question of you better be careful what you hope for, because when gold finally takes off, or when gold holds its own, let's say, against a bear market in stocks, you may regret that the reasons that have brought it about.
Now, I'm not sure if we mentioned it on air. Bitcoin, other cryptocurrencies, people keep wanting to buy them, although the prices after the last little collapse haven't gone up.
Yeah, it's a speculation that's really part and parcel of the whole global mania in assets. And I think that Bitcoin will not outlast the bull market in stocks. I have a target myself for Bitcoin of 89,780. So that's quite a bit above its old high. And it looked like a no-brainer to me, but more recently I'm thinking, well, maybe not. But that target is still there, and it does imply a pretty big move remains for Bitcoin.
Rick, anything else we should be keeping an eye on right now?
I'd have to say this time, keep an eye on everything, because it's hard to know where the trouble is going to come from. There are a couple. I don't follow too many gurus because it just confuses me, but I know that Bob Hoy, for one, is pretty good on credit spreads, and he's basically on the basis of some of the things that he tracks that are related to the banking system, the financial system. He feels pretty strongly that the top is already in, and Bob works hand in hand with one of the best technicians in the business, Ross Clark, who is a good timer. It's hard to know what's going to spook things into reverse here, but it's coming.
Mm-hmm. Well, there are two of the stars here on HouseStreet.com. Bob, being a market historian, you'll be surprised how many times he brings up Cicero.
I know he is a student of history, and he's got it kind of organized so that you can see that we never really escaped the stupidity that got us in the past. And Bob's very good at kind of relating the panic of 1783 or whenever it was to things that are going on, to show you that things really haven't changed.
Yeah, and he points out the Fed was invented, they said, and don't forget, it's the big banks. Somehow people think the Bank of Canada and the Federal Reserve are government organizations. They're not. The government appoints the chair, but they're made up by the biggest banks in that particular country. And they said on Jekyll Island, which just the name alone should make you scared, that on Jekyll Island, when they came up with it, the idea is it'll prevent recessions and depressions. And Bob has pointed out there have been 18 recessions since the Fed was invented. They don't prevent anything.
Yeah, and the late great C.V. Myers from Spokane, Myers Finance and Energy, that was a point that he made, that the Fed was so cleverly organized that there's no stock ownership of the Fed. That you can't say that they're owners, but there's certainly a cloaked conspiratorial group that maneuvers the Fed, much to the advantage of the banking moguls. So I don't know. If you read The Creature of Jekyll Island, it's anybody who has read it, who's in politics, should be out there screaming about let's get rid of the Fed. But the only person who does that, of course, is it was Ron Paul and his son.
Rick, thank you so much for chatting with us.
Well, most welcome, Jim. I always appreciate the chance to come on and connect with your listeners.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of HouseStreet Media Incorporated.